Hey everyone, this is Jose here. We're about to start like 10 seconds away. Please, this is a sound check. Go ahead and type something nice in the chat box. Just a quick hello would do. And that way I know that you hear me and we are ready to start. So please go ahead and give me a little message so we can start. Wonderful. Thank you so much, Lisa. How are you, Dirk? Tui, how are you, everybody? Sound is good. Very, very nice. Perfect. Okay, so let's begin. Okay, let's begin. Welcome to the session, everyone. Today it's September 12, 2019. My name is Jose Blasco. I will be your guide. And today I'm guiding you into the world of longer term trading. And what we mean by longer term is anything above and beyond intraday trading. So typically we utilize options in today's session. And we are looking at directional trades, non-directional trades, and looking at opportunities, typically what would be known as swing trades, even though we may find anything else and we may plan for it, okay? In any case, before we start, as always, we have a disclaimer, so I will do that quickly. The following videos, clips, demonstrations are for educational and instructional purposes only. Tradictive provides these videos purely for the purpose of demonstrating a method of using the product. Users understand that all the content used in the video is purely for demonstration purposes only and is not a guide and does not provide any indication or prediction of actual results. As a user, you understand and agree that hypothetical results obtained through a demonstration do not indicate in any way the results you may receive when using our products. And that's the end. Okay, so the session is now officially introduced. And therefore we are ready to begin. Okay, so nice to join you all, my friends, in today's session. A quick note before we begin. We had a technical issue yesterday evening hours US when we were going to run our vitamin T session. So some of you try to either watch it live or watch the recording after the fact, and you realize that the session was not there. So we had a little technical issue, but we move it for today. Okay, so the vitamin T session that was going to happen yesterday, 7 p.m. New York time, will happen today, 7 p.m. New York time. Okay, guys, so just for you to know, quick note there, okay? So make sure you don't miss it. Anyway, so let's begin the session. And again, as always, when looking at TradeStation, we're gonna be looking at directional trades, long and short. We have our scan that have identified a bunch of opportunities here. And then we have our purely non-directional trades, okay? And then we also have some neutral trades, okay, identified from the scan, neutral with a bias to the upside and also neutral with a bias to the downside, okay? Normally, when starting those sessions, I always start with pure non-directional trades. But again, no matter where I start, the key is that you manage your portfolio properly. We have run sessions on portfolio management when we did sharpening sessions some time ago. Those sessions are recorded on the YouTube channel, so make sure you don't miss it so you understand what your portfolio needs. You may have too many longs, too many shorts, you are lacking longs, you are lacking shorts, you may be too short theta and you need positive theta, etc., etc. And depending on all those requirements, you would end up looking at the scan to identify the opportunities that your portfolio needs so you keep your portfolio well balanced, okay? So in this session, I will assume that all the trades I plan, you need them, and that will be my assumption, which may or may not be the case. Of course, you would decide which are the trades that your portfolio needs, okay? But anyway, so let's begin. Non-directional trades, if you look at the results from the scan today, on my side, I have only got 4 results, and out of 4 results, 2, which are HYG and XLU, those 2 happen to be ETFs. So it's quite a strange situation. Normally, when we run the scan for non-directional trades, we end up with a longer list, okay? I'm not saying like super long, but certainly longer list. And, when these things happen, it could be 2 reasons. And the fact is that today, those 2 reasons are happening. So reason number one is that volatility has been dropping. Okay, and you can see here that volatility has been going down for a few days already. This is the chart of the VIX, and I'm looking at a daily time frame. So we had a drop in volatility, which is quite intense. Okay, going from around 25 to around 15. Okay, so that's a significant drop in volatility across the board, and therefore most of the options across the board have been losing a lot of their premium. Of course, our non-directional trades, okay, in general, all our trades that are credit are looking for conditions of high premium, and therefore, because of this drop on the VIX, which is quite intense, we are finding less opportunities because of that reason. So that's one of the reasons why the list is short. But the other reason is also that when you look at the S&P, okay, when you look at the S&P, you can also see that in recent times, okay, and more today, because the market will open 0.34% up. So what has been happening since recent times is that the S&P has been moving up, and it's a pretty nice move, going from around 280 to around 300. Okay, so it's a $20 move in a few days. And what does that mean? It means that, remember, stocks are fragile. We always talk about that, isn't it? Most of the stocks react to other external forces, the S&P being one of the most powerful external forces. And when the S&P started pushing higher, well, guess what? Most of the stocks started moving fast. If the S&P moves fast, then most of the stocks are likely to move fast. And that is a direct contradiction with non-directional trade means. Non-directional trades means trades that are not likely to move too far too fast. But the fact is that we have a major push in the market, and therefore most stocks are in that condition. So the two things together, the lower premiums available that we can see with a low VIX, together with the fact that the S&P has been pushing quite hard, those two things together is the reason why today my list only have few symbols. Again, maybe the day begins and 2 hours later the market starts dropping, and so some stocks may start trading range bound, and we may have more results on the scanner. But as we speak, that's what we got, and I wanted to explain why is it that today the list is shorter than what it normally looks like. Okay, because when you run this on your own, I am sure that there are times where you have questions like this for yourself. It's like, okay, well, last time I did this, I got 15 symbols. Why today I got 4? Okay, so again, just sharing a little bit of insight, if you wish, practical information for you to know what's going on. Okay, so therefore we're gonna start looking at AVGO and also MLNX. Of course, when looking at non-directional trades or in general trades where you sell premium, for sure it is critical to understand why is it that those premiums are high. Remember, the scanner is looking for high premium. So the question is, okay, so why is it that those premiums are high? Okay, and in order to find out this information, I am gonna be loading here. I have it. Okay, I am gonna be loading here Yahoo Finance, so I can go ahead and input AVGO to look at what's the earning date, because obviously if the reason for that high premium was that earnings are about to happen, then that would be a bad news. And by the way, that is the case of AVGO, with a earning date set to be tomorrow on September 13. So it's no way I can do a non-directional trade in this one, because even though I may have the UFOs I need, even though I have the premium I need, the reality is that I'm likely going to get a gap as a result of the earnings result tomorrow. And if I was to be in that non-directional trade where the sooner I can use an expiration date is actually tomorrow, well, then basically I'm going to get caught by that gap no matter what, and I may end up suffering a loss instead of a profit. So we cannot do AVGO, and therefore the only choice for us today would be MLNX, which I'm going to load. And let's see what we have when it comes to earnings dates. In this case is October 22nd. Okay, it's October 22nd. So let's go ahead and load the chart of MLNX. 55-minute time frame is my edge time frame, so I'm gonna be loading that one, and we'll see what's gonna happen. Okay, so on the upper left you can see PD for pending data. I'm just gonna wait just a little longer. That's it, we have it, and we get a result of 48% using a regular session. If we were to use pre and post market, we have 37. Okay, so that's not good. Okay, this is not good, and basically all of this is invalidating our opportunities for today. I mean, I'm not gonna say it's crazy if you were going to do the trade with 48% because you have multiple UFOs above and below, etc., etc. But the fact is that we normally want 50%, and you have seen me use a little less in case of non-directional trades. But I do feel that 48%, I mean, if it was 49 something, I'll take it, but 48, you could. And there are times where I may do it because there are so many UFOs above and below. But in this case, it's not like there are that many. On top of that, this is a stock that may have a little bit less liquidity than what would be the desirable. So let's take a look at the option chain. And basically what I'm thinking behind in the back of my mind, what I'm thinking is, okay, so we're dealing with not the greatest probability with the AutoUFOs. We are dealing with not that many UFOs above and below. We are dealing with a stock that is not exactly between UFOs. It's a little higher than lower. And on top of that, we may have lack of liquidity. So, it's too many little problems. Nothing is major, but too many little problems. And therefore, I am inclined to pass on this trade. Just want to take a look at the liquidity, okay? Out of curiosity. And yes, liquidity is also not good. Not this 130 to 70. You got 60 cents of slippage. So again, not a very liquid stock. The UFO measurement, which probably has a lot to do with the fact that the stock is not so liquid. So the measurement, the UFO performance stat is not the best. So basically, no non-directional trades for today. Okay, I don't remember the last time we had a situation like this. Okay, but this happens. Okay, and every day in the market is different, and our job is to adapt to what the market gives us. Okay, so we are now left with two choices. Okay, choice number one, which is to plan on directional trades, which for sure we're gonna do that. And the other choice, which also for sure I would like to exploit it, is to look at neutral trades. Okay, neutral trades, which is gonna be kind of like the non-directional, but now we're gonna have a little bit of a bias to the upside or a little bit of a bias to the downside, and we're gonna play it, doing credit spreads instead of playing it using iron condors. Okay, so that's gonna be the plan. For those trades. Okay, but in any case, before I go, quick question there for everybody. How's it going so far, guys? Everybody with me? You said hello at the beginning of the session, and then everybody's quiet, which again, there is not much to comment, but I just want to confirm that you are all with me, everything is good, and also if you have any question or there is anything you want to say, this would be a good time as well. Okay, so how is it going, guys? Quick confirmation, please. All clear, very good, perfect. Okay, yeah, so again, so let's begin. Okay, let's begin. And since almost every week we are dealing with non-directional trades and then we move into directional, so what I'm gonna do today is begin with planning trades that are gonna be neutral. Okay, just because it's an exercise that we do just a little less often, I'm gonna start with this today so we get a little more practice with it. So that way when you have to do this on your own, you know how to do it. Okay, and again, I particularly prefer to combine directional long, directional short with pure non-directional, because when you do pure non-directional trades, okay, so let's say you are doing an iron condor. So if you do an iron condor, okay, let me write it correctly. So if you do an iron condor, you probably remember that you buy a call above, you sell a call below the one you buy, and then much lower you sell a put, and then you buy a put below the put you sold. Okay, and so basically you're using two units. Okay, the two on the top, they will provide a call credit, where the two in the bottom, they will provide a put credit. Okay, and therefore you are collecting two credits, making the overall credit to be a larger amount of premium received. If you were to only do the neutral with a bullish bias, okay, then we're gonna do what we call the bull put spread, which is the bottom part of the iron condor. That's the bull put spread, and therefore you would only collect the put credit. You would not collect the call credit. If instead of doing the bullish biased neutral trades, you were to do the bearish biased neutral trades, okay, then you would also do the credit spread, but in this case it would be called the bear call spread. That's how it would be called, and the bear call spread would be the call side of the iron condor. Okay, in other words, you would collect only one credit. So I love the iron condors in the sense that you collect twice the credit. I mean, it's not exactly twice, but kind of twice. So because you get more, that's one benefit that could be significant. especially if you are running it in parallel with directional trades that would make you money if the market moves, which is when the iron condor would tend to fail. Okay, so you're kind of offsetting each other. Now here, if we're going to start with a neutral, with a bias to the upside, which is the bull put spread. So when you do that, you only collect one portion of the credit. Many more times, you will realize that the trade doesn't work. Remember that when we do a bull put spread, we always want to collect at least 50%, okay, credit. So we want the credit collected, okay, to be greater or equal than 15% of the distance between strikes. Okay, so in other words, if you sold the 50 put and you buy the 49 put below, okay, the distance between strikes is 1. Okay, so 15% of 1, how much is that? Is 15 cents. So that's the credit we want as a minimum. Okay, so that condition is more difficult to meet if you only do the bull put spread or the bear call spread versus doing the iron condor, where you are, you know, collecting twice as much credit. Okay, so that's why, okay, these and other reasons are the reasons why I would rather do iron condors, but today we cannot. Okay, because we don't have any opportunity which is valid. So therefore, we're going to have to be adaptable and adapt to what the market needs, adapt to what the market gives us. So if your portfolio needs positive theta, and therefore you need to do non-directional trades that pay you credits, okay, or neutral that pay you credits to collect positive theta, then you have to, okay, and therefore this is the time to do the credit spreads. Now be ready to say no many times before we get a yes, okay? Where with the iron condor, we get yeses more easily. With the credit spreads, we get more no's and few yeses, okay? But it's certainly a very valid way to do this, okay? Iron condor equal more credit and lower risk. Absolutely, Lisa. Yep, and here we go, dear. Yes, so let's go for it. So AVGO, I mean, we talked about it a minute ago. We cannot do this trade, okay, because that's Broadcom reporting earnings tomorrow. Okay. By the way, we have a trade running here with Broadcom right now, and this trade that we entered on 8/29. Unfortunately, I'm using a different username today in TradeStation, so I cannot show you this in the account. But this trade that was entered on that day, you know, went down, went up, okay, stayed in there for a while, and then finally now is breaking the range, okay, and AVGO is trading at 300 point. Oh, sorry, I was just confused with the 913 here, guys. Yeah, that's the earning dates, not the expiration. Expiration was September 6th, so September 6th was right there. Okay, this is September 6th. Okay, this is September 6th, which is right here. So we enter the trade right here. That stock went down, and then it went up, and then it stopped, and then the options expired, and this is a trade that ended up with a full profit. Okay, and again, I'm sorry I cannot show you that one as a result today because I'm using a different username, as I said, in my TradeStation platform today. Okay, so I'm just gonna delete all the lines. Okay. Good one. Yes, I just got, you know, so many trades in the end that I just got confused, guys. Yeah, I'm sure you understand. Yeah, so it expired worthless, Lisa and Dirk. You collected a profit out of this trade. Good job. Okay, love it. So again, let's look for the same type of opportunities where we make money on time decay. But again, I'm repeating myself one more time. We are looking at those trades that have a bullish bias. Okay, so we're gonna be selling the put side only. We will not be selling the call side. Okay. So AVGO again, not a good candidate. What about Biogen? So Biogen, BIIB. Let me see what we have. BIIB reporting earnings on October 21st. Okay, so this is a valid candidate. Okay, we have nothing in front of us that could be the reason for a gap, at least based on earnings. Okay, and therefore it would be a valid choice to plan on a non-directional trade. Now with BIIB, we got 50% probability with using regular session data if we activate pre and post market. So we are talking about 44%, which is certainly worse than 50. So 50 will do. And now what we're gonna do with BIIB is to simply enter the symbol on Option Station Pro. Of course, we'll want to shoot for the shorter expiration date. One day from now would be amazing, but let's face it, it's not likely to work. So we would want to use the next expiration date, okay? And we'll look at the put side, and the first thing I wanna do here is to just right click without even thinking, mechanically, analyze and sell a vertical spread, just so I get the vertical spread on my simulation window, so I can go ahead, okay, and calculate what is -1 standard deviation. That's all I need to know. What is -1 standard deviation? Okay, from now until September 20, the platform is calculating that -1 standard deviation of price movement brings a BIIB down to 236, and this to me makes no sense. Let me try to see why it makes sense, because this is the current price and I get the current price here showing. So is it because maybe the option chain already reset or something like that? What's the time? Oh yes, that's what it is. So the option chain has reset, okay? And because the option chain has reset, which happens 10 minutes before the open, so then there is no volatility information in the platform, and therefore no volatility means no movement, and therefore no movement means that from today until September 20, the stock would stay where it is now, which is 236.06. Okay, so we're just gonna have to wait 10 minutes to begin our planning of BIIB. Okay, so what I'm gonna do, so we take advantage of our time properly, is that I'm gonna start with looking at opportunities that could be valid directional trades, and we'll start preparing the charts for that. And 10 minutes from now, when the market opens and we get real-time data on the option chain, then we will complete all the planning, okay? So what do we have here? First, we have Ally. And by the way, let's move first. So I'm gonna start with the stocks that I know that have very good and liquid options, okay? All of these are theoretically valid based on the filtering that TradeStation has done, but of course, not all stocks are the same from a liquidity standpoint. So when we look at ExxonMobil, this stock normally has pretty liquid options with no problem. And we got 53%. We have with pre and post market, this is 53.99. Okay, so it's better like this. Okay, to be honest, when as this market is dropping, that stock is dropping 1% as we speak. So that UFO will be gone the moment the market opens. So certainly, you know, I could use pre and post market where I can see those two UFOs, 70.83, okay, is lining up nicely with 70.84, which is the value for the EMA given the type of climate that we have, okay? Now, having said that, something that I'm not happy with is the fact that if you take this number, which is the statistical measurement of how long normally up markets will last, which is 6, and remember, I always round it up, that would be 7, okay? So 7, so if you think of 7, and you take half of 7, which is 3.5, so that would make this calculation 10.5. The current candle is 9. When the market opens today, it's gonna be candle number 10. And you know, this up climate is likely to last for 10.5 candles, where we're gonna be entering the trade in candle number 10. So I kind of feel that we are a little too late. In other words, you know, a lot of movement already happened. And I mean, it could certainly drop here and continue, okay? But probably, you know, a proper correction would be more something like that before then you have another push, okay? And, you know, AutoClimate is telling you about this, okay? And therefore, I'm gonna move to the next one. XME, XLP, XLK, XLF are ETFs. So just to look for something a little spicier. So I could be looking at Weibo, more interesting, probably United Airlines, $88 stock instead of 49. I'm always inclined to get stocks of a higher price value. It makes options more interesting. So $88, that stock is in a current up climate, 6 candles into the climate. When the climate is up for that stock is 9 candles. So let's call it 10, 10 and a half is 5, that's 15. So if we enter today, we enter in candle number 7 out of a climate that we will be expecting to be out of 15 candles. So you're gonna be in another 7 days in this trade if you were to enter today. I'm fine with that, okay? So what do we have with the probability? 49%. That's not good. If we look at pre and post market, we need more than 50. We got 41. So hey, not good. The way large market players are dealing with UAL is that if they don't get their orders filled, they are canceling orders. Okay, so we're not gonna expose ourselves to canceled orders because that's low probability. Okay, I'll come back to Weibo in a little bit. I prefer to look at stocks of a higher price. For example, LULU could be a candidate. So let's take a look at LULU. So loading LULU. What do we have? 5 candles into the climate. Up climates would be 10 plus half is 15. So we're gonna be entering candle number 6. That's good. We got 52%. That's good. It's more than 50. Let's look at pre and post market. 53, even better than 52. So we have it. And then we have an average located around 192, which 192 falls in the middle of this UFO, which is from 195 to 191. So we're good. Okay, we're good. We just found a valid opportunity for us to execute. So we need to now follow the process. Now that we have checked the climate and everything is good, we're gonna follow the process looking for targets in the weekly time frame. Okay, looking for targets in the weekly time frame. So activate AutoUFO. Let's maximize. So we don't see any target there. What if I go for monthly? Is that stock making all times highs? Yes, I believe so. So that stock is making all times high, which is nice. I mean, in one hand, you cannot have a target, but in another hand, we have experienced together before what happens with all-time high opportunities. I'm not saying buy because it's all-time high. I'm saying follow the process. But the fact that it's all-time high means that there is no target overhead, and meaning that there is no sell orders overhead, and that opens the door for potentially, not always, but certainly potentially for LULU to just keep going and going and going, like we have seen in other trades that we have executed together, isn't it? I believe we have a setup like that with Starbucks. We have a few trades like that, isn't it? And some of you guys, really learn a valuable lesson, and we have the same setup again. So again, we're gonna plan on entering a trade here, and we will not have a target. So the idea will be just keep trailing stop, trailing stop, trailing stop as new UFOs form, and that moving average and that climate keeps expanding. Just keep trailing stop. Okay, just keep trailing it. Okay, that's it. So that's what we're gonna do. Okay, so let's get ready. In 2 minutes from now, the market will open, and we'll plan on this trade. So you know what? I'm not gonna change to a different stock now. I'm just gonna stay with LULU because 2 minutes is very little time, and also because there is one more thing I need to say before I start planning the trade, and I could do that while the market opens, which is that normally when we plan directional trades, just like for the neutral, I was talking about, we do the bull put spread, okay, made of selling the put and buying the put below. Okay, well, in this case, that would create a credit, isn't it? Well, in this case, we are directional. So instead of a credit, we don't want a credit, we want a debit. So we want to pay, okay? So to pay means that we need to use calls, okay? So it's gonna be a call spread, not a put spread, okay? And that call is also, that spread is gonna be bullish too, so it's gonna be a bull call spread. And as the name suggests, it's made of calls. So normally you would sell a call and you would buy a call. That's how this would be done. Notice that is all reversed. Okay? Instead of puts, it's calls. Instead of credit, is debit. It's all reversed. So you would buy a call, okay, and then you would sell a call. You would buy a call, a little above current price. Okay, and you would sell a call a little above the target. But, and this is why I'm writing all of this, but we don't have a target. So how do you know which call to sell? Well, we don't know. So what do? We don't sell the call. And therefore, instead of doing a bull call spread, we're just gonna buy a call by itself. This is still gonna be a debit. It's gonna be slightly more expensive as a trade, but again, it will also allow us to capture a bigger profit, okay? Because, you know, there's nothing overhead. So the tricky part here would be to how to pick the expiration date if you don't have a target, because normally when you have a target, you can go ahead and calculate the TTT, but in this case, there is no target, okay? So then there is no TTT to calculate. What we're gonna do is to use the earnings report as a reference guide to know which expiration date to use. And as you can see, the expiration date is December 4. Sorry, the earning date is December 4. So we're gonna have to pick an expiration date that takes place around that date. So the market just opened. Let's go ahead and load LULU. Let's see which options are available. So this is loading, very good. And what do we have? What do we have? We have December 20. So that's the one you would pick. Now, earnings are on the 4, which means that you need to get out before the 4. Okay, you will need to get out before the 4. And by the way, that's 99 days. I'm a little surprised about that. So June, September, December. Yep, that's fine. That's fine. For whatever reason, it felt a little far in time, but yes, that's correct. So anyway, so this will be the plan. Okay, so we will just go ahead and buy a call. So I'm going to analyze, okay, and buy a single call. I'm going to put it in here. Okay, and remember, I'm not gonna buy it now. I would want to wait for LULU to drop around 192.5, which in this case, I'm gonna have to use this UFO. So I'm gonna use 194.99. Okay, so 194.99, that's gonna be my 194.99. Sorry for that, sorry for the typo. So 194.99, that will be my entry price. So let me delete the other price slices. So we are just focusing on what my entry would be. Okay, and in this case, I just picked the 200 call. But remember, we always want to find something around 30 delta. Now, unfortunately, I got 190, 195, but above 200, it goes straight into 210. So, okay, well, 210 still looking okay. 38 delta. Let me see. Yeah, we can do that. Yeah, that would be it. So, I mean, normally you want 30 delta, okay? But again, I'm always a little skeptical. That's why you are seeing me kind of pause and think. So when you look at those options that are a little far out and also a little far in date, you lose a little liquidity. So 985 to 1030, it's a little bit of a pain on the spread, as you can see. A little bit of a pain on the spread. And this is also hurting a little bit the recalculations, because the recalculations are done with a midpoint, and given the fact that there is a wide spread, is distorting the Greeks a little bit. Okay, now seems that the market is normalizing itself a little bit now with a little more trading. So yeah, still showing as 38. Again, I'll take it. Okay, it seems that it should be okay, so I will take it. Okay, so here's the trade. So the trade is to buy the 210 call that expires on December 20 for LULU, but only buy it if LULU was to drop from the current value, which is 198 something, to 194.99. This would be the triggering price to take the trade, which we could do that automatically with what TradeStation calls activation rules. So I'm just clicking trade. By the way, one more comment before you do it for yourself. Notice that the simulated value at entry is $853. So this trade carries that risk because that's the cost of the call, and therefore that's the most you can lose. So again, if this is too large for you, don't take the trade. If this is too large for you, trade it with paper money. And if this is too small for you and you want to assume a little more risk, you can always buy 2 calls, 3 calls, etc., to adapt to your risk appetite. But remember, this value is your risk, so keep that in mind when placing this order. Okay, so I'm gonna use a market price here. I'm gonna use an activation rule based on the price of LULU, and we said if LULU is less or equal than 194.99, this would be the time for this trade to be executed. So I'm gonna click OK, and then I just need to place order. The moment I place order, I will have a confirmation window that summarizes the fact that we are buying to open one of the 20 December 210 call on LULU, but we are only buying it with an activation rule of LULU as a stock being down all the way, reaching the value of 194.99 for this order to activate and therefore being filled. So I'm going to click yes, and the moment I click yes, that's it. The order is in the system. I can see it in my manage window as received, single order to buy LULU. Okay, so I mean, that's it. We have it. That's it. Okay, I do have very little else to be said about this trade unless you have a question, and therefore I'll be ready now to go back to the non-directional trades, the neutral ones, and go back to BIIB and look into planning this trade. Okay, if you have any question about the LULU trade, or if I went too fast and you need me to show you something again, please let me know. I'll be more than happy to do so. So here we go. So we are back to regular session with BIIB. So we got, okay, that's gonna be tough. Okay, so let's not waste our time with BIIB. The next red UFOs are so far away that this trade will not. Oh, sorry, wait a minute. I'm thinking non-directional, and this is a neutral long. Sorry for that, guys. Okay, it's habits. So yeah, so we are. I don't care about the red UFOs. Okay, I only care about the green because it's a neutral trade with a bullish bias. Okay, in my mind, out of habits, I was thinking non-directional, but it's not the case. Okay, it's not the case. It's not a non-directional. So, as we were doing before, I wanted to enter BIIB. I wanted to enter, and I did. I entered using the shorter expiration date here of December 20. I did right click earlier, analyze, sell a vertical, and when I did that, it got me in the analysis tab, it got me the vertical spread with the puts in here. Again, before we adjust any of these, what I wanted to accomplish is to enter this parameter of -1 standard deviation in the simulation window. So TradeStation tells me that, like assuming that we don't know UFOs exist, which of course we do, but assuming that we don't, and we were to only apply mathematics and the laws of probabilities, so it would, these particular statistics would suggest that LULU got room to move all the way to 225 from now until September 20. So then 224 something is the number I got in my mind, and therefore I'm looking at the chart, looking for that number, which is right here. Okay, so current price is here, okay, and LULU is likely to do whatever, sorry, BIIB, Biogen, is likely to do whatever it does, okay, but based on the stats, that stock is likely to do whatever, but remain around 225 before now and expiration, based on pure statistics. So it's good to know, because below price we got 2 green UFOs. In other words, if we were to sell options below this UFO, not only based on stats, we are not likely to get there, but on top of that, you got 2 UFOs to defend yourself. Adding probabilities for Biogen to go up instead of Biogen going down. Okay. Also, by the way, we have an up climate. Okay. This also helps for that stock to remain where it is. Okay. And that's why we do the scanning the way we do as well. So the question is, what happens if I sell the 224 options? Okay, and to know that, I need to go, I need to take a look at my option chain, And to be honest, I am very disappointed right now, because when I look at the 225, I can see the ask price of 125 and the bid price of 20 cents. This is a $1.05 spread. This is absolutely crazy nuts. And again, we have seen things like that, and then you go for the middle and you get filled, because market makers, they are obviously intelligent people, and they make a business out of getting orders filled. So, you may get a much better price than what it looks like, but the fact that it looks like that, it's really, really not appealing at all, okay? So I'm just gonna go ahead and pass. I'm just, out of curiosity, look at what will happen with the next expiration date. Okay, so look at that, the next expiration date, 150, 160, that's reasonable. Okay, but by the way, this is happening with a 225. The next strikes are a disaster as well. Complete disaster, 265, 015. Wow, huge lack of liquidity in some strikes where others are okay, 270, 280. Okay, 460, 480. What an interesting thing. I mean, I'm not surprised about that. We've seen that before, especially with stocks that got strike price increments of $2.5. They normally have less liquidity, but it's quite exaggerated. Okay, so I'm really not happy to see that. Same happened with the next expiration date, October 4. Okay, guys, we are wasting our time with Biogen at this moment in time, so we're gonna go for the next one. Okay, so what else do we have here that is normally nicely liquid? So Oracle could be a good one. So let's take a look at earnings dates. So for Oracle, the next earning would take place on September 11. So that was yesterday. Okay, that was yesterday. We have seen cases like that. When that's the case, I'm always a little skeptical, because TradeStation updates values for options at the end of the day, so it's always end of the data, and therefore the value that we have now for Oracle may not be aligned with the reality of Oracle. So what I'm going to do is I'm just going to look at the daily time frame of Oracle. I am going to go ahead and activate implied volatility values. The current value of implied volatility is looking like is 82, which is very high. But now I want to compare that 82 with the real-time volatilities that we have in the option chain, and see if that end of day data is far from the reality, which probably it is, and it is. Notice that the reality is more like 30, 20 something. So earnings took place already. Okay, you can see the impact of earnings. That stock is down by 5%, while the market is up. That stock is down by 5%. So earnings created a pretty important impact on that stock. And even though we have it on the list, we are not gonna be able to use it, because those options are not full of premium any longer. Okay, those options are not full of premium any longer. So what else do we have then? Well, now we are left with XRT and XLU, which are ETFs, so I will pass. T-Mobile, which I made this comment before, which is a stock with, by default, even if it shows up in a list of high premium, still it's gonna be very low premium, because it's a utility company, and normally they're very slow movers. So MO, Altria Group, this could be a candidate, even though I'm not too excited, because 44.72, that is a low value for a stock, if you wish, and you're going to be selling premium, so the more expensive the stock, the better. In this case, it's only 44, so I'm not so excited, but still, we'll take a look and give the stock an opportunity in case options are super hefty. We may be able to have a trade, so we'll take a look, especially given the fact that we don't have too many to choose from today. So October 31st is the earning date. Being that the earning date, we have nothing in front of us until that date, so we can certainly use next week or the week after or the week after for this particular trade. We do have a proper probability value, 52 with regular session. If we change to pre and post market, it's 52 as well. So really we can use any. It's fine. We got good values. So the real question is, how far should we be selling those options? So mechanically speaking, without even thinking, I'm just gonna enter the symbol go for the next expiration date, being the next one. Let's begin with the next one. And I'm just gonna right click, analyze and sell, and vertical, and activate my -1 standard deviation, remove everything else. Oh, no, not delete all the slices. This one, yes. So 41.63 is where that stock is supposed to go from now on to until September 20. And this is being the current value, $49.09. Okay, so 41.5 is the number you should keep in your mind. Give me a second, guys. Sorry, I'm back with you. So 41.5 is the number to be kept in mind. If I zoom out, if I go ahead and change to regular session, so what do we have? Well, I'm gonna have to load a little bit more candles here to see more of what's on the left. Let me see. Okay, so I need to load more candles. Okay, so let me see in the daily time frame where we're at, so I know how much more data I need to load. Yeah, so whoa, it's looking like, yeah, I'm gonna have to load data all the way at least 2014. So here's what I'm gonna do. Okay, and you have seen me do that before. So I'm gonna disable AutoUFOs. I'm gonna load the data I need in the 55-minute time frame, which is the time frame I need. Okay, so first date, January 1st, 2014. So I'm gonna load all this data. Okay, and once the data is downloaded, okay, the PD on the upper left goes away. So then what I will do is I will disconnect a TradeStation from the network to be able to run AutoUFOs and to have AutoUFOs to run only once. Because if not, AutoUFOs runs every tick, okay, because it's real time. So we're gonna just wait here for a sec, and then I will show you how I disconnect. I'm gonna teach you a couple of tricks on how to disconnect and reconnect to the TradeStation network that involves the use of the keyboard. Okay, so I'll show you that in a minute when the data is downloaded. Yeah, Dirk, Oracle is very high volatility, but again, not any longer. Okay, so I guess that source of data is also end of the data, the source of data that you're pointing at. You're pointing at CBOC or CBOE. I'm guessing it's going to be the CBOE. Okay, come on, MO. Give us that data. Yes, I guess so, dear. Here we go. We have it. Okay. So now that we have data, now pay attention. This is a little trick. Okay. So what you would want to do is to type dot on your keyboard, and then you type OFFLN. It's like, sorry, OFFL, and I believe I need the N as well. Yeah. We also need the N. So .OFFLN, exactly. That's gonna make TradeStation to be offline. Okay. Did I get confused here? Oh yeah, it's without the N. Here we go. Interesting. Working offline. Okay. So I guess I'm offline. So now I'm going to activate AutoUFOs. Okay, this will allow me to find The UFOs, first of all, with regular hours data, I got 51.92. If I switch to pre and post market, that would be 46. So it's gonna be better to use regular session. So 41.5. Okay, so I'm gonna draw a few lines so then I can remove all of these. 41.5 would be here. Okay, that would be it's 46, 41, 46. Really, we have more. We also have 41.32, which is around here. We also have this one here. There are many UFOs actually right here. Okay, so I'll go for another one because again, being that stock only $40 a share, I may not find premium if I go too far out. Okay, so now that I did that, I'm gonna disable AutoUFOs again. I'm gonna go ahead and go back to the normal amount of candles I normally use, 1,597. And now that I have this new amount of candles on my chart, then I'm gonna type .onl, which is working online. And when I do that, TradeStation will ask me to relog in. And once I do that, I'll be back to normal. Here we go. Come on, TradeStation. Wow, that's a really long time for TradeStation to load. Okay, so let me tell you what, this is not really not looking normal to me. So I'm just gonna close. I'm just gonna save. Okay, save. And I'm just gonna close TradeStation and I'm just gonna reboot it, okay? Because something little weird, I would say, is happening. And I just want to make sure everything's gonna be smooth until the end of the session. So I'm just doing a little cleanup and I will restart TradeStation. Yes, something weird happened. Normally when I use the command, you know, it's dot OFFL for offline and .onl for online. So normally it's quite normal, quite visual, but when I went offline, you know, I felt it different than normal. And I am concerned that something was not working fine on my TradeStation. So yeah, so I am just reloading here. Here we go. Okay, now it feels more normal. Thanks for the patience when these things happen. You guys tell me, while I'm waiting for this to load, you guys tell me a quick message on the chat box if that's okay. I mean, how is it going on your side? How is the trading going? Are you guys finding the time to practice on your own? The methodology, the methodologies I've been sharing with you. I mean, you may employ other methodologies as well. Of course, everybody is different in trading, but you know, again, share a little bit of how is it going and your experiences. I'd love to know, guys. So please share with me, okay? So anyway, we're back to MO. I want to double check the amount of candles that I have on the chart. It's 1,000 plus. So I'm gonna re-enable AutoUFOs, beautiful flying saucers. Here we go. And we got our lines from before, okay? So now I know that that stock, it's not likely, okay? It's not likely to reach, based on pure mathematics, that stock is not likely to reach 41.5 from now until September 20. But I also know that I have a UFO at 42, I have another UFO above 41, 47. So I got multiple green UFOs on top of each other, which support what the mathematics suggest of that stock not going below that value. Okay, so I would love to be able to sell options around 41.5 or something like that. Okay, I would love to be able to do that, but I can only do it if I meet my rules. Okay, so it's not looking good. Yeah, it's not, because if I was to okay, so take a look at this section, right? Especially this one here with the mid prices. Okay, so if I was to sell 41 and 40, just to pick round numbers, so the risk is 1. So sell the 41 and buy the 40. Okay, so if I was to do that, okay, remember I'm working on the put side, which is the right. So if I was to do that, I would be being paid 26, okay, and I would have to pay 14. Okay, that would give me a net credit of 12. Okay, but remember, we need 15% of the risk, which 15% of 1 is 15, but we only get paid the difference between 26 and 14, which is 12. So it's not good enough. So the only way would be maybe to look at the next expiration date. So if I do 42 and 34, again, we get little credit. So not good. If we were to do the next expiration date, October 4, we'll do like 41 and 40, so that would be 48 and 34. That's gonna be 14 cents. Yeah, again, I'm not excited. And the problem, the bottom line is what I said even before I started. $44 per share will always give you a little premium. That's why you always see me a little more excited when I'm dealing with stocks which are, you know, $100 a share, $200 a share or above, okay? Yeah, so MO, not a good candidate. MLNX, we said UFO stats were not good. KNX, well, you know what? I never traded that stock. So let's look into it. Night shift transportation holding. Okay, so I never traded that stock. So let's KNX, let's take a look at liquidity. Okay, because one of the reasons why I never trade that stock maybe is because it's not a very liquid stock. So let's look at it. Yeah, we're not gonna trade that stock. Okay, as you can see, the spreads are very wide and strikes are missing premium, and yeah. So CAG, it's at 27, 29. I mean, 37 was not very good. 29 is even worse. And even though AVGO is good, we cannot do it, as we said, and BIIB 235 is also sounding very good, but we cannot do it either. Okay, so then we're gonna have to move into neutral trades with a bias to the downside. And here we have 3, Adobe, eBay, and NEM. So let's begin with Adobe. And we start, as always, looking at earning dates. So the earning dates for Adobe is on the 18th. Okay, so good news and bad news. 18 is bad because the next Friday is 20. So earnings are happening before 20. But the good news is that Adobe is a close to $300 stock. And this normally pays good premiums. And because of that, we may find a way to make it work using tomorrow expiration date, which is September 13, and being 13 prior to 18. So that's always worth it to check, especially given the fact that we can see multiple red UFO on top of each other. Okay, all of this is looking good. What is not looking good though is that 47 number. That doesn't make me happy. So let's move into pre-post market to see if that gets improved. And unfortunately it doesn't. Okay, so hey, that's what it is. That's when discipline is important, and you need to feel good by following the discipline, even though a trade that looked promising happens to objectively be not promising. 47% is not good. So eBay. Okay, so eBay and NEM. Let me tell you what, I'm just gonna pass on those. First, because we only got 1 minute to conclude the session, but most importantly, because calls always have less premium compared to puts. And if already I told you that $40 stocks is not amazing when selling puts, well, imagine when selling calls. I mean, you could get the premium in extreme situations, but I don't think, we may end up wasting our time looking at it. So if you have time as a practice, take a look, because if you have the premium, it's a valid trade, so go for it. But in the session today, I will not do it. Okay, so the last thing I'm going to do is to see if we can find a trade for directional shorts, in case you need any of this in your portfolios. Okay, and I would like to start looking at UM. So what do we have with UM? So we have 2 candles into the climate. The climate is 4. 4 and 2 is 6. So 2 out of 6 is good. Average 116.19. 116.19. We got 56%. That's very nice. 116.19 though it's somewhere in the middle here. So let's see if we change to pre and post market. 56 becomes 42. That's not good. Yeah. So that one is a shame, guys. But this one, let me tell you, this one is one for you to watch for tomorrow, because what's going to happen here is that if UM falls a little more today, and let's say closes somewhere here tomorrow, so what's going to happen to the average tomorrow is instead of 116, it's going to drop down. And if that average is around 115, guess what? This is around 115. And now you can go ahead and do this trade. But you may need to wait for tomorrow, which is still good, because there's going to be 3 ruby dots into this climate, which is fine. So keep UM in mind, probably for tomorrow. Okay, and TTD, let me look. TTD, let me look at liquidity for that. So TTD earnings, talking about November. So if we look at November, liquidity is, it's not good. It's not good. Lacking liquidity, that stock. So that's why I wanted to check. And I'll check one more, and we'll complete today. EXAS. So EXAS. So we have earnings happening on October, right? October 28. So October 28 for EXAS. That would be October 25. And no, lacking liquidity here, guys. Lacking liquidity. That's why I wanted to look at the option chain. Okay, so guys, we're done for today. And today it seems that the one trade that was a clear one was the one with LULU. And everything else, some of those things, some of those trades were close, especially the one with UM that we just saw. But no other trades, at least based on the time when I did the scanning, was meeting our rules. Okay, so something you could do now on your own is to go ahead and rerun, okay, those scans, okay, click run again, rerun the scans with updated market data, and you may get different results, and maybe you find a trade. But based on what I've got, we are done, and I'll be more than glad to see you again over the weekend. I have something to say, by the way, super quick, no matter if you are watching this live or recorded. So recently, in case you don't know, let me get into tradingview.com. So recently we have launched, okay, so ideas published. So recently we have launched a new app, which is called AutoClimate, which we had in TradeStation, and now we also have it available in TradingView. Okay, so if you ever want to subscribe to this app, as always, you need to use our website for that. That's a free app, by the way. Okay, so you go for tradewithufos.com/join. Okay, and you can you pick the basic plus membership, and we'll activate the app for you. Again, it's an app that got no monthly fees. Okay, so you just need to pick basic plus. Okay, there is a one-time fee for the activation, but that's it. Okay. But what I would also like to ask you here is that you guys go ahead, take a look at this app, and also if you have been using it either on TradingView or TradeStation, it'd be nice of you to comment so other users that have never used it, they kind of know what to expect from it from a user point of view, because from a developer point of view, we have certainly written a long paragraph where we explain what the app is, but it would be nice, and that's a little favor I'm asking you guys, if that's okay, it would be nice that you could explain as well to other users what is your view of the app from a user point of view, not like us from a developer point of view. Okay, so that would be very nice. So, again, helping the community a little bit to understand the tools available, okay? But anyway, that's it. So we are done for today, my friends. I will see you over the weekend with sharpening. See you then, my friends. You take care. A pleasure to spend this 1 hour with you guys. Love it, love it. See you soon, okay? And keep up the good work and the discipline and everything needed to succeed out there, okay? So counting on you. Take care, my friends. Bye-bye.